Hello and welcome to Edison TV. I'm Miłosz Paps, Director at Edison, and today I'm joined by Jean-Marie Mognetti, who's CEO at CoinShares International, a pioneer and well-established player in the nascent, high-growth digital assets industry. Jean-Marie, thanks for joining us today.
Hi, Miloš. Nice to be with you today.
Maybe you can start by providing our audience with a high-level overview of the recent developments across the digital asset space. Now, obviously, the year was quite eventful with the approval of Bitcoin and Ether spot ETFs in the US. So maybe you can shed some light on those developments.
Yeah, you're right. Bitcoin ETF and Ethereum ETF has been kind of the topic of discussion in many forums for the last quarters, effectively. An ETF in the US has been a discussion which starting in 2014 and took a realization in 2024. In the meantime, Europe was running on its own with a proper ETP and ETC structure that CoinShares was running for a very long time now. So what's happening in the US right now is something we have been working on in Europe for 10 years. It's quite funny to see how the dynamic has been affected. But what is funny as well is like how strong has been the interest from the market, because the market in the US, for sake of grayscale, was deprived of a good investment option, and this ETF has been very good. So to give you a few numbers, for instance, the spot Bitcoin ETP complex around the world get around $2.75 billion of inflow in Q2 alone, and since the beginning of the year we're talking about $19 billion. So it's a very strong wave of inflow across all the issuer, obviously dominated by the US majors like BlackRock and Fidelity, but it's a very strong demand for Bitcoin and the Bitcoin narrative, which find, I would say, an acceleration itself with the Ethereum narrative. CoinShares was not thinking in terms of timeline that there will be an Ethereum ETF this year, based on our dialogue with the SEC. The most recent acceleration has to be politically driven. It accelerated all of a sudden without a real kind of reason for a change of stance. And as a result, we launched Ethereum a couple of weeks, or 23rd of July. So Ethereum has been live on 23rd of July. So another product live, it's obviously opening the road for many more products in the US. I think at that point, it will take a bit longer to see them coming. Ethereum start, not as good as Bitcoin start, obviously. It's also a much smaller market cap, Bitcoin dominance back on the book, so nothing surprising here. The other kind of notable fact is really the US presidential election and the kind of crystallization of tension around the US presidential election. I'm sure you saw last week on Saturday, there was the Nashville Bitcoin convention in Nashville, Tennessee. Former President Trump had a keynote speech where he promised, for instance, to put all the Bitcoin seized by the IRS or all the Department of Justice on the book of the Fed. Howard Lutnick, the CEO and chairman of Cantor Fitzgerald, who is the main backer of Tether, was also on stage explaining how bullish for Bitcoin Cantor was as a firm. So plenty of positive development happening on that side, showing that Bitcoin is coming out of the libertarian maximalist kind of thematic to become a real investment theory, a real investment diversification asset class, and something people want to hold in the portfolio. Going back to Europe, we have a bit of a, MiCA is on the map. MiCA is developing. MiCA is a regulation for crypto in Europe. It's a passportable regulation across Europe, so that's quite good. And finally, we saw in Asia, I would say, the launch of also ETF in Asia, mainly in Hong Kong, which, maybe one day a gate to mainland China, because as you know, the Hong Kong stock market is connected to mainland China. So eventually, if authorized as a passportable product into mainland China, you could expect inflow from mainland China into the ETF product. So all in all, a very good semester for crypto and for the entire ecosystem. Plenty of good news. I would say the key risk for us when we look at what is happening is we want, as a company, that we don't turn crypto into a political asset. It should be apolitical. It should be beyond parties, and should not be the attribute or the Democrat or the Republican. It should be something much bigger than that. So that's the only limitation we're seeing right now. But it will resolve itself in the next few weeks, where I'm sure the Democrat will rebalance and take a pro crypto stance as well to counter the Republican narrative.
Perfect. Thank you for the insightful perspective. Now let's maybe focus on CoinShares International. Why should an investor consider an investment in CoinShares International instead of or alongside an investment in Bitcoin or any of the other listed digital asset companies?
Well, it's okay. So I'm preaching for my own choir here. So I'm gonna be a bit direct here. Let's put it this way. First and foremost, CoinShares is a company which has been around since 2014. It's a company which is delivering sustainable recurring revenue since 2016 with positive revenue and I would say strong margin and growing net revenue. All that combined make it already unique. It's a listed company since 2021, so it's a very, I would say, well-run from a corporate governance and strategy and go-to-market plan company. And finally, this is the first company in crypto as a listed company to start paying a quarterly dividend to its shareholder. This dividend is set up as a function of the performance of the previous year and pay in 4 installments across the next year. So it's a quite of a unique case in itself, which in the ecosystem of crypto make it standalone. Now, the case is okay. Why CoinShares more than Bitcoin? First of all, CoinShares is certainly less volatile. At the same time, CoinShares has a very interesting convexity effect that Bitcoin won't have. So the starting point is like if Bitcoin goes to zero, well, MicroStrategy goes to zero or close to zero, or any other company like this goes to zero. CoinShares has a $300 million NAV, which is a real NAV, which is like effectively cash on our book. So if the Bitcoin goes to zero, there is still money left for shareholder. Our value don't go to zero. The second point is like if Bitcoin goes to 100,000, 150,000, 200,000, which is kind of the narrative we are expecting to see unroll, then our cost base is not going up. We are able to scale with the price of Bitcoin. Our AUM only goes up. So at that point, we're in a very good position to deliver sustainable return to our shareholder on an adjusted risk basis, which you will not get through direct Bitcoin exposure or through other company. You can buy MicroStrategy today at 2x book value, and the book value is composed of only Bitcoin. So I'm not really sure it is the right trade. If anything, you should be long CoinShares, short MicroStrategy, but it might be a complicated trade right now to put on if you can't find the book. Anyway, that's why CoinShares is a good company. We make money in bear market, we make money in bull market. We have growing ambition to become a global company. We started doing an acquisition in the US recently, which allow us to be in the ETF race. Obviously, we will not compete with BlackRock and Fidelity, but we'll be able to bring a different kind of angle to the crypto narrative in the US. We are looking at how to extend in Europe and grow distribution and look at other vehicles for distribution in Europe. So net, it's a company which is very cost focused, very ROI focused for its shareholders, with a lot of growth capacity, and ultimately paying a dividend as well. So it's a company everybody should get in this portfolio.
Thank you very much. I think you've given us a good rundown of your perspective of the company's investment case. Now, maybe you can discuss your recent entrance to the US market, obviously with the recently launched hedge fund solution business, as well as the acquisition of Valkyrie funds. Yeah, sure. So just to put things in perspective, we were very clear with our analysts that CoinShares will not be doing a Bitcoin ETF in the US. And I've been the one saying it to the analyst community a number of times. And the reason why was that we've been doing that since 2014. We have seen many companies, the Bitcoin ETF in the US was driven by the Winklevoss brother originally, which are not on the finish line, which is quite sad actually. Because at some point a lot of company has been sponsorizing legal fees and legal fees and legal fees. And we thought it was a bad use of our shareholder money to go after to just pay legal fees, and then at the same time
we are not an American company. We don't have a distribution force in the US. So how do we expect to compete with BlackRock or Fidelity on that game? Especially if they decide to crush the price down, making the margin kind of unreasonable because they can afford to do it. However, so that was our starting point. So we said the only stuff we're going to do in the US is start to reinforce our broker-dealer presence so as we can put a sales force to sell our hedge fund solution product in the US. After all, the US is warehousing 50% of the world AUM, so it would be a good place to sell our hedge fund solution product. So as a result, we spent last year establishing our broker-dealer and widening its outreach to the entire US, so we can market our product in every single state and make our hedge fund solution product acceptable for general solicitation to make the marketing and distribution effort much more simple. That was done. And as we were doing that and spending more time in the US, come across the Valkyrie opportunity. And the Valkyrie opportunity was too hard to say no. So we look at it, we challenge ourselves internally very, very hard, and we couldn't find a compelling argument not to do it. So on that basis, we went back to the board, and said, look, we know we said we're not doing it, but it's going to be difficult to justify not to do it if we have if with such an opportunity. So we press play on this opportunity. We start the due diligence. We start the paperwork. We put an option first because we couldn't just run the risk to consolidate everything in the last months of the year. And then earlier this way, we close transaction and start the integration. We are in full integration mode. What this company is bringing to CoinShares in a very kind of simple terms is one, a registered investment advisor, which allows us to effectively manage money for our client in the US. Two, a 40 Act fund platform and a 33 Act platform. So the 40 Act is basically like the BRRR, which is our Bitcoin ETF platform, which is a table stake, something we need to have. And the BRRR ticker is a funny ticker because it's symbolizing the money printer going out of control in the meme culture, which is very present in the US. But the more interesting platform we have is a 33 Act platform, which is a series trust platform, which is also an ETF format, which is allowing us, in short, to bring different kind of ETF to the market that we can't really do in Europe. So for instance, we have a mining ETF. So it's a crypto equity mining ETF called WGMI for We're Gonna Make It, another meme culture reference, which is working extremely well and very complementary to what we do in Europe with our block index. So a lot of things which are complementary there. And then there is a leverage Bitcoin. There is a Bitcoin and Ethereum basket. There's a few stuff we're working on. But more importantly, it's allows us to start thinking a little bit differently about how to bring more actively managed ETF to the market. How do we start blending the power of distribution of ETF with the research capacity of our hedge fund business to bring, I would say, hybrid solution product. And this is something which is becoming more and more interesting in the US to do. ARK, for instance, has been doing that, not always in a very successful way in terms of performance, but in a very successful way in terms of AUM. And I think that's something we want to explore and see how we can start to hybridize the distribution and the asset management function in the US through this platform. So plenty of good things here. We're very excited about it. Our European team is coming to the US quite often to integrate and make sure the people we have on the ground now are feeling part of the CoinShares, I would say, wider family, and that the CoinShares brand is becoming represented in the US. So I think by the end of the year, the CoinShares brand will be completely implemented on this acquisition, and the acquisition will be finished with a team in place and a go-to-market plan, which would be ready to go.
Thank you. That's very helpful. Now, we've already touched upon your dividend policy, and you also recently announced a special dividend following the sale of your FTX claim. So maybe you can shed some light on this and maybe tell our viewers what sources of recurring income are underpinning your dividend payments, right? Obviously, the Ether staking
Sure.
playing a role.
Yeah. So I think sometimes people... I got a lot of discussion about this dividend story because people say, oh, if you're paying us a dividend, it means you are bored or you don't know what to do with the money or and so on and so forth. And it's not exactly the case. we have been on the board of a lot of company or a shareholder of a lot of company where the management keeps the money but don't do much with it. And sometimes it's good to give the money back to shareholders so as you can ask him again. And if you have a need, and people feel much more compelled to give it back to you if they feel that you are also capable of paying them back the money when you don't need it. So we're not really in the business of hoarding cash. We know we have capacity to raise money if we want to raise money at size. We know we have capacity to go to the debt market if we want to raise debt, which we don't really have. I think we have $20 million of debt on our book. We know there's capacity to increase that. So on that basis, the company being very profitable with very strong margin, the company doing good return year on year, we almost have a good sense of the stability and the scalability of our return profile. So we said, well, because our stock price is not reflecting the real value of the company, we're trading at book value right now, so which is basically cash. So there is no real enterprise value associated with that, so we're like, okay, well, it's time maybe to look at it differently and start rewarding our shareholder for their loyalty and staying with us in this journey. Bear in mind that a couple of years ago, equity was the only option because the bond market was not paying you anything. So people tend to be, I would say, patient with a stock not performing the right way. But today, the bond market pay you, still 5% of yield. So you have to find something to justify your shareholder to stay loyal to your brand and to understand and keep believing in you. So it's kind of a way for us to tell them we understand the stock is undervalued, but we also want to make sure you guys feel we're not taking you for granted, and we are standing with you, and the management and the shareholder remain aligned in the journey we are going through together. So that's really the way we look at it. And that's also the why we are not paying that in just one lump sum, but we're paying it in installment on a quarterly basis, so as it become almost kind of a function of our life cycle, and we are very, very comfortable with that. It's of course, some years going to be higher and some years going to be lower, but depending on the overall performance of the business. But we have a kind of I think a pretty good understanding about how to run that from that perspective. Now, when it comes to the FTX claim, if you remember, we were affected to some degree by the FTX debacle back in November 2021. November 2021. No, 2022. Sorry, November 2022. Confusing on the years. And Richard, which is our CFO, had the right approach at the time and just decided to write off with the support of our audit committee and the risk committee to just write off the entire thing and just say, you know what, if we get the money back one day through any recovery form or any form of recovery, we will be able to book it back as an exceptional revenue. We have been extremely careful in the way we manage this claim. This claim was on our book since effectively November 2022. On the 1st of December 2022, a very well-known crypto company wanted to buy it for 8 cents from us already. And we're like, that's not going to happen. We'd rather keep staying where we are. And the stuff we did very well, which is certainly like, I would say, something linked to our community background, is like we didn't keep our claim in Bitcoin before the company went bankrupt. We were like already all in cash. So we revalue our claim right away before the company declared bankruptcy in US dollar. So we're not exposed to a Bitcoin movement or an Ethereum movement, because in our mind, it was very clear that the liquidator, whoever it was, will effectively need a base currency, and this base currency would be US dollar and not like 60 different cryptocurrencies all on the book. And when we saw John J. Roy, which is the former Enron liquidator, being appointed, we knew we were right, because the playbook of Enron was exactly that. So we did that move very, very well, and then it was a question for us to understand exactly what was the recoverable asset and the time it will take to recover this asset. I think we were last year for 40 cents on the dollar purchase price. We were hit with a 60 cents on a dollar purchase price, but we didn't really blink, and because we knew the recoverability was very high. There was a lot of asset not monetized yet, like the Anthropic AI company they had on the book, which was not sold yet. So we wanted to see all the big item being sold out first. So as the claim was almost at par value. And at that point, we approached a few hedge funds specialized in distress and start discussing what would be the best pricing process. And we ended up having a very good price, which was 116 cents net of brokerage fees. I think the gross price was 118.5. So it's as good as it can be. It's better than the Fed rates, I would say, on the cash we had there. So, of course, there is a huge component of luck because there was some good asset on the FTX asset estate. But, it was a good thing. Now, what we decided to do with that is say, okay, well, this money impacted the share. When the FTX event happened, the company wasn't affected. Our staff get paid. Everybody got paid. The people who were affected were our shareholders. And by that, I mean, the share price was, I would say, damaged by the FTX debacle, like every crypto company was damaged by FTX debacle. But since then, the share price didn't really recover completely from that because pre-FTX, we were trading around 80 sec, and we're still not back there. So the right stuff to do was say, well, okay, our shareholder has been with us on the journey. They stay with us during the recovering of this thing. So let's give them back some of it so as they can benefit from our work and from their patience. And, that's, again, an illustration of us being lined up with our shareholders in terms of what we want to do. That's not impacting our growth strategy. That's not impacting anything we want to do. We didn't have this money when we make our budget at the start of the year. We didn't budget anything based on this money coming out or not coming out. So it's not something it's not an action which should prevent us to do some new stuff tomorrow. So it was the right stuff to do to pay that back to our shareholder to make sure they were able to continue the journey with us.
Perfect, thank you. Maybe let's conclude by discussing the long-term prospects of the digital assets industry. So what new market opportunities do you see for CoinShares International in the long run, which may be currently in their infancy?
Well, look, so in the infancy, the US is definitely in the infancy for CoinShare. And as I said, the US is the biggest asset management market in the world. So if CoinShare can get a crumbs, I would say, for sake of a better word, of the US market as a European company, it will be extremely good for CoinShare. And that's a real infancy stage. There is a lot of stuff to do in Europe. The LSE is still closed for business for European product retail. It's open for, I would say, sophisticated and institutional investors. But if you look at the data, it has not been a success at all. So, we want the LSE, we want the UKLA, we want the FCA to start opening the gate more to retail and effectively act as good protector of the UK consumer market, because that's basically what it is. It's like making sure the UK consumer can have good quality product and access to good quality product. The Italian market is a market which is still closed, which is a very, very big market in terms of private banking. So that's a market which should open. And then there is a big elephant in the room in Europe as well, which is the entire UCIT complex. UCIT is a big investment franchise globally, which is mainly driven through Ireland and Luxembourg investment vehicle. This is still not open for crypto at all. Our block product, which is a crypto equity product, which is around 900 million of AUM, is a UCIT product. It's a joint venture of Invesco. We can see the value of the UCIT narrative when we sell to investors this product. So it's something we definitely understand, and we think it's at some point the regulation will evolve. So that's kind of the, I would say, internal growth path. Also, as in all industry maturing, there's an external growth path. CoinShare has a very, very solid infrastructure, which allow us to be a very good integrator and a very good roll-up player for the industry. If our share price was running a little bit better, we could do it in stocks. At the moment, that doesn't look like something we want to do in stocks, more something we will do in cash. But we will be a good integrator for the industry. We can pass down the entire cost or the quasi entire cost of someone who will be rolling up to zero and just attract the AUM, attract the revenue, and just add it up. So really two paths of growth for us. Internal, we discuss it, a few different initiatives, and external, there is a global roll-up play to have, which is it's too early, but that's kind of, you know, we are looking ahead and we're looking forward. So we're not really like looking for the next 6 months. We're really working on the next 3 to 5 years plan. And I can see consolidation happen at that point.
Jean-Marie Mognetti, CEO at CoinShares International. Thank you very much for your time.
Thank you, Miloš.